Previously, we were doing the questions on cash flow statement, and you were given profit and loss account or income statement, and on the basis of that, you are supposed to calculate cash from operation, means cash generated from operating activities. You know, for this purpose, I mean to say cash flow statement, all activities are grouped into three categories: operating activities, investing activities, and financing activities. Now, you have to solve the question when you are given two balance sheets, opening balance sheet and closing balance sheet, or you can say balance sheet in the beginning and balance sheet at the end, and you are asked to prepare cash flow statement on the basis of all this information. Suppose these are the two balance sheets. For 31st March 2010 and 31st March 2011. These are the columnar balance sheets. On asset side, cash 5,000, then 16, furniture 5,000, 4,000, building 0, 5,000, and the total is 10,000 and 25,000. Now on liability side, capital 10,000, 20,000, loan 0 and 5,000, and the total is 10,000 and 25,000. And at the footnotes, it is given that the drawings during the year were rupees 2,000. So these are the two balance sheet and some additional information, and you have to prepare cash flow statement. Before I prepare cash flow statement, I would like to prepare the capital account first. You know, on credit side, it is BD, rupees 10,000, and on debit side, to balance CD, 20,000. This is the closing balance. You know, it's a capital account. All plus items are placed on credit side and all minus items are placed on debit side. What it means? If you want to increase the capital, place the item on credit side. If you want to decrease the balance of capital, place the item on debit side. So it's clearly written drawings. You know, drawings are always placed on debit side of capital account. So two drawings, rupees 2,000. So you will find on debit side the total is 22,000 rupees, and on credit side it is only 10,000. It means there is a balancing figure of rupees 12,000. Now the thing is, what can be this item? I mean to say this 12,000. Naturally, there is only one possibility, and that is net profit. It can be fresh capital, but it means if you put it as fresh capital, it means there is no net profit during the firm. It never happens. Either there should be some profit or loss. It must be net profit. So this balancing figure is net profit of the firm during the year. So on both sides, total is 22,000. So we have found that this firm earned rupees 12,000 as net profit during the year, and the drawings for rupees 2,000. Now, before I prepare the cash flow statement, I must know the value of cash from operation. You know, for cash from operation, I need the profit and loss account. Let's imagine on the basis of available information, what is the profit and loss account of this firm looks like. On credit side, I don't know what is there, but on debit side, there must be two net profit at the end, rupees 12,000. One thing more, if you look at the balance sheet carefully, in the last year, the furniture was 5,000. Now furniture is only 4,000. There are two possibilities. Either the part of furniture has been sold, or there should be some depreciation on the furniture. So the stronger possibility is that there was depreciation on furniture, because furniture is a depreciable asset, and there is always depreciation every year on furniture. So it must be depreciation. So it means if there is depreciation on furniture, it must be placed on debit side. So on profit and loss account, debit side, to depreciation, rupees 1,000. I don't know the other items. But on the basis of available information, I can say this should be the profit and loss account. And to calculate cash from operation, what I will have to do? Net profit rupees 12,000 plus depreciation 1,000, because this is non-cash item on the debit side. It must be added back to net profit to reach cash from operation, as I have already explained you this system in my previous segments. So in this way I can say that cash from operation is 13,000. Now let's prepare cash flow statement. Cash flow statement is prepared in T shape, just like ledger or just like your balance sheet. On left hand side, write down inflows, and on right hand side, please write down outflows. And the second column is amount, just like the columns are just like amount. Now on inflow side, the first item is cash from operation, that is 13,000. Opening cash 5,000, and on right hand side closing cash 16,000. Then on payment side, I meant to say outflow side, drawings rupees 2,000, and building purchased 5,000. If you look at the balance sheet, the building previous year it was 0, now it is 5,000. It means this firm has bought building for rupees 5,000. If this firm has bought building of rupees 5,000, it has made the payment. If it has made the payment, it must be placed on outflow. So when we buy building or we sell asset, etc., these are called investing activities. Now if you look at the liability side, the loan previous year it was only rupees 0, now it is 5,000. What it means? This firm has taken loan. It means the firm has received cash. So on inflow side, loan taken 5,000. So on both sides the total will be 23,000 rupees. I repeat it. On outflow side, drawings 2,000, building purchased 5,000, closing cash 16,000. On inflow side, I am to say left hand side, opening cash 5,000, cash from operation 13,000, loan taken 5,000, and total 23,000 rupees.